Hello and welcome to Spy Money. Today I'm going to talk to you about how I trade as far as how I decide direction and things of that sort. There's a lot of different ways to trade using patterns. There's indicators you can use, Fibonacci. Just there's a lot of different ways. Every trader has their own way. There's no one right way. You just have to find what works for you. So I'm going to show you what I do, and maybe it can help you, and maybe make you a better trader. If I had one indicator to choose from, and that's all I could choose from, it would be this purple line. That is a 15 EMA, exponential moving average. So if the candles are on top of it, that's a buy. If the candles start coming below it, that's a sell. Now this right here, if it stayed here and the 15 kept on coming down, kind of like this right here, then when it dropped below here and started going down, then that's a sell. Okay, so if I had one indicator to use, the 15 would be it. But luckily I don't have to choose just one. I can, I've got several. I've got the Mac D down here. I've got my volume, and I've got an RSI, and then I've got a 180 SMA at simple moving average. I've got a 50 EMA exponential, and then a 15 EMA. And I've also got, now you can't see it there, but I also use a VWAP. And a VWAP is really good to use too. Here's the top, here's the bottom, and then here's the middle. If the candles are on top of this VWAP, then that means it's a buy. Just like right here, you can see it stayed on top and kept on going, and then all of a sudden it dropped below here and it just kept on going. Now, once it gets above the VWAP, that doesn't necessarily mean to buy. I have another system that I use, and I'll show you here in a second. We'll find one that works out better. Yeah, right here. This one here is better, good one. So this is on a 5 minute. So if you're scalping, 5 minute would be fine. 1 minute and 5 minute. When I'm scalping, I look at the 1 minute, 5 minute, and 15 minute, and I will set up. You can do like three of them right here, three screens. So you'll have your 1 minute, you'll have your 5 minute, and you'll have your 15. And then if you're doing something that is more longer term, say you're going to be swing trading. Swing trade, I will do a 15, a 1 hour, and a 4 hour. That's what I'll use. Now, if I'm going to do long swing, then I want to use the 4 hour, the daily, and the weekly. So it just depends on what you're doing. So let's go back to how I use the indicators and so forth. So when this 15 crosses, well, when the candles get on top of this 15, that's a signal right there. That doesn't mean to get in it. If you're, depending on what trade you're doing. If you're doing scalping, that's a buy. But if you're doing a swing trade or whichever, this 15 comes up, your candles, and when the candles get above this VWAP, still not a buy, but it's closer, because you can see it hit this 180, and then it started coming down a little bit. But when this 15 crosses that 50, get it real close for you. When this 15 comes up and crosses that 50, and it's above the VWAP, then that's usually a buy signal. Now it did dip down here a little bit, but you can see that it took right on off and went right on up through there. So right here's where it crossed. So if you would have got in, say right here, when it went above this 15, you could have got in there, and on this trade, it would have worked out for you because it kept on going. So that was good. But the main buy signal is you want the 15 to cross the 50. I was trying to find one that's a little better. Yeah, right there's a real good one. So as you can see here, this is pre or after hours right here. Pre-market is starting from this dotted line forward. So when that 15 crossed the 50, and then they both cross this 180, that is a definite buy signal. When you have the 15 to 50 crossing the 180 and the candles are on top of the 15, you're on top of the VWAP as well, because the dotted line is the VWAP. This is a definite buy. So you would get in right here. Of course, if you're in options, you wouldn't be able to do it until right here. So you could have got in there, wrote it up, and just kept on going and wrote it up to there. So on this particular one, if you would have got in there on an option and rode it all the way over, because this is flatline, so you'd be selling right there. So there's a 1.7% increase. Well, 1.7% on SPY is really good for options. You can make a lot of money. Now, if you'd got in here and just sold right there, then that is a 0.5%, 0.56%. So you could have made a lot of money there. Or when it come over and you could have sold right here, that's 1.23. Or you could have sold right there and that's 1.5. So, you wouldn't have had to keep on waiting. But when you come over and you start seeing, because back here you've got the 15 over the 50 all the way, and the candles are on top of the 15. So that's a buy. But when you come back over here, you can see that 15 went down below the 50. So, when it dropped down here, you probably would have wanted to sell if you could have right there, because you can see the trend coming before this, that this 15 is coming down. So when it opened up, you'd probably be selling out right here, because it looks like it's just going to keep on going, and it did quite a bit. So this 15 stayed down there. The candles had just kind of flatlined across, and then when it came over here, we actually opened lower than what we opened the day before, and before the close. So it just kept on going. So if you watch the 15, the 50, and the 180, and that VWAP, that right there is money all over. If you just watch how those interact with each other. This down here, the RSI, I like it. Some people have it set on the 70-30. Some people have the 50% line. I kind of like the 50% line. If it's above the 50, it's a buy. If it's below the 50, it's a sell. So when this is coming up and started turning green there, you can see up here that it's going up. And as long as that green stays on up in there, but you can see it's kind of coming down here. Well, this is after hours, but if this was in the middle of the day, I would have been selling back in here. When this started coming down, I would have been selling through here, because I can see that the volume's coming down. And you've got all this down here as far as the actual volume itself. You got a lot of red candles. There's a lot of selling right here. So that tells you that they're probably going to sell off. Now, on this particular case, if we come back, right here is where we were talking. It actually ended up increasing and going on up. So, we could have missed an opportunity there. But when it's coming down right before the close, I'd rather get out right here. And then the next day, you can see it drop down. You could have got back in calls right here and then rode it on up. And, you still made more money. So it really kind of depends. It's, if you're buying for long term, then you'd want to go back to, say, 4 hour. If you're doing 4 hour, you could have, when this 15 crossed this 50 right here, you could have got in right along through here. So right there, which has been on that green line there, which is the 180. You could have got in there. And now the first day you wouldn't have made much money, but the second day you'd made, the third day you would have been even, and it just keeps on going up. So you could have made a lot of money just by doing that. Now, if you wait for the 15 and the 50 to cross, let's see here. If you wait for the 15 and the 50 to cross the 180, if you'd have done that, then you would have got in right here, and then you would have been more up. But, you could have lost some potential profit. I personally like when the 15 crosses the 50, that's a buy for me, especially with those candles being on top of that 15. So that's a buy for me. The MACD is something that I don't use a whole lot. I still keep it on my chart just to look. But if you look right here, this blue line, when that crosses and comes to this cross right here, that's where you want to be selling. And if you look up here, you can see there's the blue line crossing, and you can see that it starts dropping. So when you see these mountains and it's bright green, that means to stay in it. But when it starts turning dark green, that's a good chance that it's going to go ahead and reverse down. Now, if we look, let's see if we can find, there's one right there. Now you can see this was coming down, and then it spiked up again. So it was down right here, and it looked like it was going to continue. But as you can tell, I can't go back further on it, but as you can tell, it's still above that 15. If those candles are above the 15, I'm staying in. Now, if it's just kind of, coming down a little bit, I'm still going to stay in. and then when you come up and you see it actually drop down, and now you've got a second candle below the 15, this is coming down, that's a good sign that you probably ought to be getting out. In this particular case, if you got out here, it went right back up, but it could have kept on going, and you just don't know that. So it depends on what you want to buy. If you're doing longer term, if you're doing scalping, or whatever it is that you're buying. I trade more options than anything. So if you buy options that are at least 30 days out, preferably longer, for your, depends on your swing. If you're planning on swinging it for a week or two or something, then you ought to buy 60 days or more. You can buy up to a year out. You're going to make money on all of them. If you're buying the same week options, it's risky, and you can make a lot of money on like a short little spike, but as soon as it starts coming back down, your premium goes away really quick. So, but we'll get into that in another course. This is just to talk about what indicators I use, how I use them, and why I like them better than others. And I've used a lot of indicators, but for me personally, like I said, if I had one indicator to use, it'd be the 15, because you can see here when this candle came across and went over the 15, you could have got in right there and rode it up, and then when it came down and started coming here, being up as far from right here, I would have held it here, because overnight it went on up. Now it could have come to here. Now right there is 147%, so that's still a good percentage. But if I'd held it and it just kept on going, and then when it come over and it's starting to touch this more, then when it comes over, then right there I'd definitely been getting out for sure. But if you'd look, this is almost straight across there, so that's a good sign that it's hitting resistance and it's probably going to bounce down. So you could have sold there. Definitely sold here when the 15 crossed the 50. So right there is 3%. And if you would have got out, say, right in here somewhere, then there's 3.78%. But you'd been out of the trade a whole lot quicker. So your premium would have been better here than what it would actually even a little higher over here, because your premium, the theta kicks in and starts eating up your premium. So as long as you stay above that 15, then that's fine. So I hope this helps you. It may not be the way you want to trade. You may want to add some of it to the way you trade, or maybe even use this completely. But that is how I trade. It works for me. And as long as you're buying the right direction and so forth, then you're going to make a lot of money. And this is more directional trading here. So if you have any questions or anything, let me know. Be glad to help you.